the multi-trillion-dollar money markets that underpin the global economy seized up.
The speed at which it happened, the way in which financial institutions just, withdrew from the market because they were worried, I think that was unprecedented. And it surprised politicians, it surprised regulators, and certainly surprised the banks. So once you're in that vicious circle, lack of confidence, bit of lack of trust, you don't know who's holding the problem, everybody then, like lemmings, run for cover.
Once people got scared, they started being less happy to lend to each other, they started being less happy to work with each other, and again, that in itself led to all sorts of other activities, specifically securities going down in price.
Was that fear rational?
Is fear ever rational? I don't know, but is that fear rational? I'll give you a short answer, yes. The fact that people did not know the full exposure to the subprime area or to the SIB area or whatever, yes, of course, if you don't know something, being fearful is rational.
Once the river of money stopped flowing, with banks and financial institutions loath to lend to each other, there was a very high-profile casualty in Britain.
One of Britain's biggest mortgage lenders needs emergency support from the Bank of England. Northern Rock has problems raising money because of the crisis in the financial markets.
Yeah, absolutely clear. There is no suggestion that this business is fundamentally bust, but merely running out of money in this way for a bank is extraordinarily serious.
The company was very successful because it was taking a tremendous amount of risk.
Northern Rock went to the brink of insolvency because its business was dependent on raising money by selling its mortgages to international investors. And when investors were burned by losses on subprime, they refused to buy any mortgages, Northern Rock's or anyone else's.
They were actually possessed of enough capital to survive approximately a 1-week shutdown in the capital markets. That was all.
Banks across the world, in Germany, France, Switzerland and the US, have lost tens of billions of dollars and have had to be bailed out by governments or by investors with deep pockets.
The Swiss bank UBS says it suffered much bigger losses than anticipated because of its exposure to the subprime mortgage market in the United States.
And today Barclays said it had written off £1.6 billion of risky investments related to US mortgages.
The global credit crisis has deepened, with America's 5th largest investment bank asking for emergency funding. Bear Stearns, which has been hit by the US housing market slump, has been bailed out by another bank and the Federal Reserve.
Some of the bankers responsible for the financial losses are losing their jobs.
Bonuses of investment bankers are going to fall drastically now that you're discovering that a lot of the banks, investment banks, are taking billions of dollars worth of write-offs, and these people are getting kicked out unceremoniously out of their jobs.
As for those companies bought by private equity, well, if they took on too much debt, they'll experience difficulties, which would be bad news for their investors and employees.
There are some clear examples of loans which are looking dreadful now. Some of the leveraged buyouts done at Fatface, the retailer, Countrywide, the estate agent. The loans on those companies are being dealt with regularly now at discounts of a quarter or more to their face value. So clearly there are some bad loans out there.
But many of the super rich who helped create this unsustainable boom are sitting pretty.
There are a lot of people who have made enormous amounts of money, created great mayhem, and I'm afraid they're not going to get hurt greatly by what's happening now. There is, I understand at the moment, for example, quite a shortage of high-end hotel rooms in the Caribbean, Mauritius and similar places, because these people have got nothing to do at the moment and lots of money.
Having trousered so much, the super rich apparently have a problem many of us would love.
Very top-end people are very liquid. I've made a lot of money in the last 10 years. in fact, probably find it quite difficult to spend the money they've earned. And that's why companies like us, I think, are very successful, because we help them spend their money. Frankly, for companies that are producing such limited quantities of these very exclusive products, they can't manufacture them quickly enough. There's a new Rolls-Royce, the drop-hit coupe that was launched last year. If you were to walk into your Rolls-Royce dealer today, if you were lucky, you would maybe get one in 2 years. They continue to indulge in their passions, and I don't see that changing anytime soon.
And demand for the most expensive motoring experience on Earth doesn't seem to have evaporated.
The car is not only the most expensive and fastest car on the planet, but it's also one of the most usable cars. The customer who pays 1.1 million euros plus tax gets a car which is really second to none. The British have been the best European market, and they still are the best European market. They are only the second to the US. Our best dealership in the world, single dealership in the world, is Jack Barclay in London.
So for the super luxe industry, price cutting isn't on the agenda.
The $1 million watch cannot be affected by no price. That's the extreme. The extreme is safe. At the 1 billion, there will always be demand for $1 million watch. That is for sure. And if you want to build a new watch brand and you want to go safe, start with 1 million, your first price. Then you are safe.
The reason the super-rich can feel safe is that the gambles they've taken with other people's money have been so huge that the authorities have to bail them out, or else the damage to the rest of us could be crippling.
These people who operate in the financial markets, they're smart. They know that they are too big to fail. They know that the authorities will ride to their rescue. And so everywhere along the line, there are one-way bets. And this means that you are incentivized to take big risks. You're greedy. The bigger the risk you take, the bigger the profit for yourself. And if things go badly, oops, not our problem, your problem. You pick up the mess.
It's a mess they've landed all of us in. The losses incurred by banks, hedge funds, insurers and other financial businesses, which could reach $3 trillion, have reduced their willingness to lend to any of us and badly damaged the global financial system. It's as though the mechanism for injecting fuel into the economy has broken down. And when that happens, we all suffer.
I think it's a mistake for people to think these events don't apply to them. That they don't own any subprime mortgages or collateralized debt obligations or even equities, so what does it matter to them? It affects us all. And the credit creation process is at the heart of everything in our economy, and without that you cannot get normal functioning. And I think the damage that's been done to that is large and it's persistent. So when you talk about the average home owner and worker in its impact on them, they probably will find that their mortgage costs more, whatever the absolute level of interest rates. If they're unlucky, they may find that their job's affected by this as well. I think there are some very severe real-world effects on people's ability to borrow.
Our banks have less money to lend to us, and they're charging more for what they will lend. That's leading to falls in house and property prices, which makes us feel poorer. and it risks creating a vicious downward spiral as we spend less and the economy slows down.
Just to translate that into what it means for ordinary people, if people are borrowing less, saving more, that'll translate into slow growth. Does it translate into a serious recession in your view?
I don't expect a worldwide recession. I do expect a recession in the United States, the severity of which cannot be predicted.
As a result of recent budget changes, the British tax system may no longer be quite so favourable to the new super-rich as it was. But what about the widening income and wealth gap between the super-rich and the rest of us?
It's more the way that wealth's accumulated. If wealth's accumulated out of people growing companies successfully, that's it's generally good. It's hard to come up with a real negative on that. If, on the other hand, it's some guy who's made all of his money out of making 2 or 3 huge financial bets, then the social implications are much wider, because those bets will go wrong as well as right, and when they go wrong, there'll be a lot of victims other than the guy. So there's a social and political issue there. So the guy who's made 100 million out of being the promoter of over-leveraged structures, that's a political issue. He's caused a lot of damage and he's got very rich.
I think an economy which is characterized by extremes of wealth is not a secure and safe economy, any more than one economy versus another economy. Extremes of wealth and income give rise, I think, to very serious moral risks.
That might not matter if we could be confident that lessons are being learned from the crisis. But what we see is that America's central bank, the Federal Reserve, is once again slashing interest rates and pumping cash into the system. Now, didn't that start the whole poisonous process?
You have a boom-bust process similar to many that we have had in the last decades. But it's also the end of a super boom that has lasted since the end of the Second World War. From time to time, the markets don't correct themselves, you have a crisis. And then the authorities have to intervene and inject liquidity and bail out the failing institutions. And that creates a system of asymmetric incentives where you are encouraged to leverage, but if things really go wrong, there is relief.
If those in charge of the system can't be relied upon to change their ways, what chance that those who play the greed game might actually mend theirs? They've been incentivized to take dangerous risks with other people's money in the hunt for big profits and vast rewards. Have those incentives been eliminated?
No, not really. I think that if you set up a basic remuneration structure where people get paid 20% of the gains from playing with other people's money, I'm not quite sure what possible event could occur to make them learn anything from it. You really just need to change the structure. That's the only thing that will get their attention.
And who's going to change that structure?
There's only really one group of people who ever can change any structure like that, and I think that's the owners. This is a matter of so long as people are willing to be shareholders in banks where traders are allowed to play with the bank's capital and walk off with 20 or 30% of the gains on it and none of the losses, and where people are willing to invest in private equity and hedge funds and allow the same thing to occur, it will occur.
If you're a hedge fund or a private equity firm, there are fantastic opportunities to profit from the turmoil. A number of hedge funds have already made billions from betting that all those subprime investments were overvalued. And some have done very nicely from speculating that the share prices of our leading banks would tumble. As for private equity, well, a recession would be just the most glorious time to buy businesses at knockdown prices. Is this actually a period of tremendous opportunity for a firm like you?
Yes, it's going to be a great opportunity. The real golden age comes when you have a mess. You have economies that are on their back, capital inadequate